In this video, I'm going to share with you everything that you need to know about exchange traded funds and how you can incorporate them into your investment portfolio and build your wealth. So here is a fun fact about exchange traded funds. In the past 10 plus years, exchange traded funds have actually returned an average of 10% a year. And that just goes to show you the potentially high returns that you can get with an exchange traded fund. Of course, with the caveat that that does depend on which exchange traded fund that you hold at a given point, and the fact that past performance does not indicate future performance. But before we get stuck in those nitty-gritties, let me actually walk you through exactly what we're going to be talking about in today's video. So in today's video, we're going to discuss exactly what an exchange traded fund is, the different types of exchange traded funds, because there are different types of exchange traded funds, and how you can effectively research exchange traded funds so that you can make the best investment for yourself. If this is your very first time here, let me take a moment to introduce myself. My name is Tando, and on this channel we talk about everything that has to do with your personal finances so that we can help you reach financial freedom. So if that sounds like something that is up your alley, be sure to hit the subscribe button so that you never miss any of our content. But with that out of the way, let's actually jump into this video. So what are we talking about when we talk about an exchange traded fund, or an ETF for short? Because wow, it would be a lot if we had to say exchange traded funds all the time. Simply put, we're essentially talking about a collection of shares or a basket of shares. So when you buy an ETF, let's say for example the Citrix S&P 500 ETF, when you buy that ETF actually contains 500 companies, 500 of the top performing companies in America to be specific. So when you go and you buy that one ETF, you're indirectly buying 500 other companies as well. So the really big thing here about ETFs is the fact that you actually don't need as much money as you would need to actually buy an individual share. So for example, if you wanted to go and buy shares in all the 500 top performing companies in America, you would need a lot of money. But with an S&P 500, it allows you to get exposure and access into those companies with a very little money, right? So that is one really big difference between stocks and ETFs, and that is why I actually like ETFs so much, because you don't need a lot of money to get started. Plus, you get a lot of exposure, so you get a lot of diversification, which means your risk is also spread around really well. So that is basically what an ETF is. And although they are not stocks, they do trade on the stock market just like stocks. At the start of this video, I mentioned that there are different types of ETFs, and I'm going to discuss two of those. So there is the index ETFs, which is essentially your passive ETFs, and then you also actually have your actively managed ETFs. So your index ETFs are your set it and forget it ETFs. There is no one that is actually going there to look and say, oh, what stocks should be in this ETFs and what stocks should not be there, right? There's certain criteria for the ETFs that is set, and if companies meet that criteria, then they're included in that ETF, right? But beyond that, there is no real human intervention in that ETF. It is completely passive. It just tracks the performance of the companies that is supposed to track within the stock market, right? So here the fees tend to be low because you don't have a manager, you don't necessarily have to pay fees for someone to actually manage that investment for you. So the fees are really, really low because of the fact that they are so passive, and they tend to actually perform really well because they're not trying to beat the market. They're essentially trying to return whatever the market returns, and this is what makes them very different from actively managed funds, because with actively managed ETFs you actually have professionals who have actually been educated in this and have the skills and knowledge to do this, where they sit there and they actually try and pick the best performing stocks that they think are going to be the best performers investors for that year or that decade or whatever term that they're trying to aim for, and then they set them up in order to try and get the best possible returns in the market and essentially beat the market, right? The main issue that I have with actively managed ETFs is the fact that it is so hard to predict what is going to be happening in the market in order for you to make a decision and say that this share is actually going to be the one that's going to be the best performer, or this group of shares are going to be the ones that are going to be the best performance, right? So that's why you find that actively managed ETFs tend to actually underperform compared to what passively managed ETFs actually return, because as I said, passively managed ETFs are essentially just trying to return whatever the market returns, whereas actively managed ETFs are actually trying to do a lot and trying to return more than what the market would have returned on average per year, which they end up actually not necessarily doing and underperforming instead. So that's the one thing that you really want to consider if you want to go down the actively managed ETF route. Let me know down in the comments if you like passively managed ETFs or actively managed ETFs. Another type of ETF is commodity ETFs, and with commodity ETFs, they're essentially tracking the price of a set commodity like gold or oil, right? We're not going to go into too much detail with those, but that is essentially what they are in terms of the definition. I haven't invested in any of them, so I can't necessarily say a lot about them. So be sure to do your research if you are interested in maybe looking at investing in a commodity ETF. So ETFs actually allow you to diversify your portfolio really, really well across geographies, across industries, across sectors, across a lot of different things, right? So that is a very nice thing about ETFs, is that if you want to be investing in Africa alone, you can actually find ETFs that are actually targeted just at Africa or contain companies in Africa, right? And you can also even say, I want to invest just in financial technology companies, and you'll find an ETF that does that, right? So that is the very nice thing about ETFs, is the amount of diversification that they actually give you. Hopefully I have somehow managed to get you to consider or to think about maybe investing in an exchange traded fund, and if you are, I've got you with how you could actually research your exchange traded funds. So there are a lot of exchange traded funds out there, but you want to make sure that you're obviously investing in an exchange traded fund that speaks to your goals, your financial plans, your financial circumstances, and all of that. So here is where your research comes in. You want to make sure you know your ETF inside and out. What are you investing in? How much are you paying for it? And all of that information. So when it comes to researching your exchange traded fund, your minimum disclosure document, also known as a fund fact sheet, should be your best friend. So a fund fact sheet is essentially a document that literally spells out everything that you need to know to make an investment decision when it comes to picking your ETF. It will have various information such as the fees, the industries, the objectives of that ETF, as well as past performance data, the different companies within that ETF. And if it is actively managed, it will also have information on the investment managers that will actually be managing that ETF. So those are all the different things that you'll find in that minimum disclosure document that will really equip you with the information that you need to know in order to make a decision. So I made a whole video to actually explain how you should be reading a minimum disclosure document that you can watch. You can click right here to actually go and watch that video, because that is going to give you the entire breakdown of exactly how you should be reading that minimum disclosure document to ensure that you know everything that you need to know in order to make your investment decision. But that is all that you really do need to know in order to go out, research your investment, actually start investing in ETFs. Let me know down in the comments if you are investing in ETFs or if you're considering investing in ETFs, and be sure to watch that video in order to make sure that you're researching your investments correctly. But with that said, guys, this is the end of this video. Thank you so much for watching. Be sure to come again and leave a comment down below. I'll be really, really excited to hear from you. But until I see you on my next video, or I see you on Instagram or on Twitter, thank you so much for watching, and I will see you on my next video. Bye, guys.